Ron and Sana, the markets like it. What say you?
Yeah, exactly. I mean, there were some large bets placed at the end of last week, Chris, amid expectations the Fed could go the half point that it just did and cut rates by that much, amid expectations also that they will continue to cut rates well into 2025. And I think we need to look at this through a slightly different prism than, trying to rescue a weak economy. The Fed is trying to normalize interest rates because inflation has fallen so much from its peak of 9.1% as measured by consumer prices down to the current 2.5% and likely to fall further. So that means that the Fed's got a lot of latitude here to lower interest rates further. They're acknowledging this. They're acknowledging what was just recently said about some weakening labor market data that we've gotten over the last several months, the downward revisions in the number of jobs created in the last year or so also playing a role in all of this. The economy is in good shape. But the Fed is trying to, as we like to say in our business, stick the soft landing. It's something that many Federal Reserves in the past have failed to do, which is to raise interest rates, kill inflation, slow the economy, but not throw it into a recession. And that's what they're hoping to do here.
What they're hoping to do, and let's just note it's at 256 right now, but in a single minute, the Dow jumped 300 points. So that tells you something. But Ron, I mean, here was the case for a smaller cut, right? There was concern that it would help avoid too much economic acceleration that might keep prices rising, that might cause inflation to remain slightly too high. Does that worry you at all?
Not in the least. I mean, inflation is likely to keep falling, Chris. When we look at things like energy prices, which are falling not just on, hefty supplies being produced here in the United States, but weakening Chinese demand. Oil prices, which go directly to consumer pocketbooks in the way of gasoline, have been plunging except the last couple of days where they bounced a little bit. Grocery price inflation has slowed meaningfully. Inflation overall is down substantially, as I mentioned earlier. The likelihood of a reacceleration in inflation based on the Fed, again, normalizing interest rates, not stimulating the economy, but instead bringing rates down to where they should be in an inflation environment that's 2.5% versus 9%. This is what the Fed should be doing. And again, it keeps the economy from weakening too much going into next year. The Fed, again, trying to avoid creating an unnecessary recession when they could effectively do this and potentially make that soft landing a reality.
I want to bring in Peter Baker, a New York Times chief White House correspondent and an MSNBC political analyst. Peter, where this economy is going will impact Joe Biden's legacy. But of course, the immediate question is about Kamala Harris's campaign. Does it help consumer sentiment, which in spite of the many gains that Ron and Sana just talked about by the administration, it's remained a negative, and it is also the most important issue for voters. So for Kamala Harris, the stakes here are high.
Yeah, the stakes are high, and this is clearly the move that she would have wanted to happen today. Certainly, it's only positive for her. Whether it makes a huge difference, that's unknown. I mean, history shows that people's feelings about the economy vis-a-vis elections are baked in months beforehand. Typically by June or July, the electorate has pretty much made its decision when it comes to how it feels the economy is in terms of making its choice for a presidential election in the fall. But this is an unusual year. It's an unusual moment. And the economy is such a centerpiece of Trump's argument against Harris that she now has something to answer, especially if this helps on housing, which has been one of the biggest frustrations for many Americans.
Democrats have been pushing the Fed to do this for a while now, and progressives in particular, Zerlina, have wanted an even bigger rate cut. They were arguing for 0.75%. The people who were talking about it earlier this week, Elizabeth Warren, John Hickenlooper, Sheldon Whitehouse, they sent a letter urging the Fed to do just that. Cut it by 75 basis points. They said your delays have threatened the economy and left the Fed behind the curve. But what do you think this means for Democrats in November and Kamala Harris in particular?
Well, it's interesting that Ron used a gymnastics metaphor about sticking the soft landing. I'll use a track and field metaphor. I feel like in a lot of ways, this is wind at the back of the Harris-Walz campaign as they're running down the home stretch, right? We're in the month of September. Early voting starts very, very soon. And so you have early voting September and October leading into November the 5th. And yes, it's true. I agree with Peter that a lot of what Americans feel about the economy is baked in already. But I think that an economy that looks like it has improved tremendously from the crash that Donald Trump led and when he was in charge and mishandling the pandemic, that crash and recovery has happened. And now the wind is at the back of the Harris-Walz campaign as we head into the actual election day. So I think that the economy is the number one issue. But if signs are pointing in the right direction, voters are very much going to internalize that, Chris.
So the same argument that we've been having for a while now, but with another huge data point, right, Eugene, with these interest rates. And the question becomes, before, the voters had heard over and over and over again about the data points, about the ways in which the job market was so much stronger, the way in which inflation was coming down, the investment that this administration had made in things like infrastructure, the plans that Kamala Harris had going forward. And yet the polls weren't exactly overwhelmingly in her favor. Do we think that people are going to take a look at the interest rate decision by the Fed and say now, you know what, I think this is the final sort of piece of the puzzle that we needed to make me vote for her?
Yeah, maybe. I mean, I think what Peter nodding at it is correct. People, and Zerlina also, they may internalize it. There are going to be those people, but the issue has not been the macroeconomics or the data, right? For a while, the Biden administration has been talking about the data, has been pointing to low unemployment, lowering inflation, and voters still do not see the economy as working for them. Vice President Harris knows this. She knows, and her team is very aware, that they have to convince people, they have to change people's feelings around the economy, right? So it's less about whether people wake up or look at the news today and say, oh, wait, this is really good. This thing happened. This feels like a soft landing, because most voters don't think in that way. It's up to the Democrats, Vice President Harris, to convince people that this is a signal, right? And this is part of a larger signal. And they can't talk about it in terms of data points, right? They have to be able to point to lowering prices in X, Y, and Z category so voters can actually feel that. Vice President Harris has talked about housing quite a bit. She has to be able to convince people that maybe you might be able to think about buying a house, that some of the folks who were staying in their first house might go to their second house, so some of those renters can leave, lower renting prices, right? That the cost of groceries would go down. Yesterday, I was on a panel with other NABJ reporters with Vice President Harris, and she talked about the ways in which she thought things were better from the last 4 years, but then she was very clear and she said, but the prices are too high for groceries, right? So they understand that the feelings about this are more important than the data at the end of the day for voters.